Tesla's SpaceX, which is now the main rocket fuel for Elon Musk's personal wealth. According to reports, SpaceX is planning that secondary share sale that would value the private company at $800 billion. So,
Elon Musk has crossed a frontier that once existed only in theory. This week, financial data confirmed what markets had been whispering for months. Musk's personal net worth has surpassed $600 billion, making him the first human in history to reach that altitude. This isn't just another incremental climb on the wealth ladder. The $600 billion mark.
Elon's stake would be worth over $320 billion. That assumes that 40% ownership in SpaceX has not changed. Meanwhile, his direct shares in Tesla are worth about $182 billion. So even if you add in the options from that disputed pay package back in 2018, his Tesla wealth is being far outpaced right now by SpaceX.
Is a stratospheric plateau, a figure that resets our understanding of individual economic scale in the modern era. It stands as a monument not just to one man's ambition, but to a specific, potent alchemy of disruptive technology, visionary timing, and the evolving mechanics of private capital. For years, the story of Musk's wealth was, in essence, the story of Tesla's stock ticker. His fortune would swing by tens of billions in a week, tied directly to quarterly deliveries, battery day announcements, or tweets parsed by legions of retail and institutional investors. That volatility hasn't vanished. Tesla remains the cornerstone, with Musk's roughly 12% stake accounting for a foundational portion of his wealth. Recent optimism around its full self-driving software suite and AI-integrated robotics future has provided a steady tailwind. But to understand the rocket-like thrust that has propelled him from the $200 billion range past $500 billion and now to $600 billion, you must look beyond the public markets to the private company casting the longest shadow, SpaceX. The real engine behind this unprecedented wealth surge is a company that doesn't yet trade on any public exchange. SpaceX, founded in 2002 with the then laughable goal of making humanity multiplanetary, is now the undisputed heavyweight champion of private capital markets. Its valuation, as determined by periodic tender offers and a frenzied secondary market for its shares, has reportedly soared to approximately $800 billion. This isn't just paper gains for venture funds. It's a direct injection into Musk's net worth. He owns an estimated 42% of SpaceX. Run the math. 42% of an $800 billion valuation translates to a stake worth roughly $336 billion. On the day analysts confirmed the $600 billion net worth milestone, the increase in SpaceX's private valuation alone was credited with adding nearly $168 billion to his fortune in a relatively short time frame. This private wealth engine has become more powerful in terms of sheer value creation than the public one that made him famous. This brings us to the catalyst sparking the current fervor, the building buzz around a SpaceX initial public offering, or IPO. While the company has remained steadfastly private, allowing Musk to execute his long-term, capital-intensive vision away from quarterly earnings pressures, the runway for a public debut is now clearly in sight. Industry chatter, analyst notes, and reporting from major financial outlets consistently point to a possible listing in 2026. The numbers being discussed are not just large, they are historic. Early speculations suggest an IPO could seek to value SpaceX between $800 billion and over $1 trillion. To grasp the magnitude, consider this. The largest IPO in history to date was Saudi Aramco in 2019, which raised $25.6 billion. A SpaceX IPO at $1 trillion valuation would not only shatter that record, but would instantly place the company among the top 10 most valuable public entities in the world, alongside giants like Microsoft, Apple, and Nvidia. For Musk, such an event would be transformative. Even a partial sale of his stake, or the simple act of marking his holding to a publicly traded liquid price, could see his net worth leap by another $200 billion or more overnight. It is this looming possibility that has moved the conversation from richest person to a speculative yet suddenly plausible new category, the world's first modern trillionaire. But the narrative is not a simple two-company play. Musk's financial empire, while anchored by Tesla and SpaceX, is becoming a more diversified constellation of next-generation bets. The most significant of these is xAI, his artificial intelligence startup, launched as a direct challenger to OpenAI, Anthropic, and Google's DeepMind. While still in its early stages compared to its rivals, xAI is already commanding stunning valuations in private funding talks, with reports suggesting it could be worth $18 billion or more in its next raise. Musk owns a majority of xAI. This venture represents a third powerful vector of growth. It ties directly into the AI boom that is currently fueling the broader tech market, and it creates a synergistic loop with his other companies. AI training could leverage Tesla's real-world video data and require vast compute power, while SpaceX's satellite constellation could provide global AI connectivity. Each venture elevates the perceived potential of the others. This convergence of sectors, electric vehicles and autonomous transport, space launch and global broadband, generative AI intelligence, is unique. It creates a meta-valuation effect, where the sum of Musk's empire is perceived as greater than its individual, already massive parts. Investors aren't just betting on cars or rockets, they are betting on a vertically integrated technological future shaped by one architect. This perception is a powerful, if intangible, driver of the valuations underpinning his $600 billion fortune. However, a net worth of this scale is more than a personal balance sheet entry. It is a market and societal event. Musk's ascent to $600 billion fundamentally reshapes the landscape of global wealth. It demonstrates the staggering wealth creation power of founding and controlling a dominant disruptive technology company in the 21st century. It highlights how private capital markets, flush with capital from sovereign funds, endowments, and megafunds, can concentrate immense value long before the public gets a chance to participate. This raises immediate, thorny questions about economic inequality, the ROI of visionary risk-taking, and the influence a single individual can wield over public markets when a company like SpaceX finally lists. The potential SpaceX IPO will be a litmus test for the entire financial ecosystem. Investment banks are already jockeying for what will be the most coveted advisory role in a generation. Long-only institutional investors and index funds will be forced to decide how to weight a new trillion-dollar player that defies traditional sector classification. And for retail investors, it represents a once-in-a-generation opportunity to own a piece of a company that was, for 2 decades, the exclusive domain of Silicon Valley venture capitalists and sophisticated private equity. The democratization of access would only occur after the vast majority of value creation had already occurred for its early backers and founder. Furthermore, the success of such a listing would send a deafening signal about investor confidence in the hard tech and frontier infrastructure thesis. At a time when broader markets may fret over interest rates and consumer sentiment, placing a $1 trillion bet on space-based internet, interplanetary transport, and satellite infrastructure would declare a bold, long-term conviction in a specific technological future. It would validate an entire ecosystem of companies working in space manufacturing, Earth observation, and orbital logistics. So where does this leave us? Elon Musk at $600 billion net worth is not an endpoint, it is a new launchpad. The coming 24 months will be defined by the relentless drumbeat towards the SpaceX IPO. Every successful Starship test flight, every new Starlink subscriber milestone, every contract signed with NASA or a foreign government will be directly translated into basis points of that ultimate IPO valuation. Simultaneously, Tesla's evolution into an AI and robotics company and the progress of xAI will provide supporting thrust. The central question has shifted from, can he stay the richest, to how high can this go? The $1 trillion net worth threshold, once a fantastical notion, is now a serious topic of analysis in Wall Street research notes. Whether he reaches it will depend on a complex interplay of engineering success, market timing, regulatory approval, and global macroeconomic stability. One thing, however, is unequivocally clear. The story of Elon Musk's wealth is no longer just a business case study. It is the defining financial narrative of our transition into a spacefaring, AI-integrated age. It is a real-time chronicle of how capital flows to where it believes the future is being built fastest. And as the countdown to a potential 2026 SpaceX IPO begins, the world of finance will be watching, calculators in hand, ready to witness what could be the largest single wealth creation event in human history. The $600 billion record won't stand for long. This is merely the holding pattern before the main engine ignition.